Let's go to the edge of the trading floor in Chicago with the CME Group. Scott Gecas with Wall Trading here with us. Scott, since last Friday's crop report came out, what has the options market been doing? What is going on in as far as the grains overall?
Pretty much all the option flow is pretty much flat. With soybeans as well as corn, the skew is pretty much flat, really not noticeable one way or the other. The only skew difference that I've been noticing is in the wheat market, and it is still elevated to the call side. The only option volume that is noticeable today is in corn. Now, with the 360s, they had about 4,000 open interest going into today. Earlier, right on the open, before the 9:15, 10 o'clock open here in Chicago, we had about 5,000 trades. So we have to wait and see if those options were actually adding to the open interest or if it was just taking away. So that open interest is going to be what we're going to be looking at tomorrow on the open.
What about Friday's chart action? Did it do really much damage to the charts on the nearby, or at least the near term?
Yeah, in corn, definitely. We had that big sell-off, big spike lower. The funds, like I said, on Friday, they nailed it. They had, a great result from the, almost record shorts. We did see some short covering coming in at the end of the day on Friday, some short covering happening today as well. That's why we're seeing a little bit of a bump up. The biggest note that we're taking away from that crop report on Friday is it was more or less a big surprise. But satellite images, some satellite images, I should say, are showing over 1 million plus acres that have had standing water for the last 7 days. So traders, as long as I can, that I've been talking to on Friday as well as this morning, is they're worried about that standing water affecting planting, and whether or not they're going to have that switch from soybeans from corn and vice versa. We're just waiting to find out.
All right. What about the trade here? When it now are they more focused now that on this being a weather market rather than a chart-driven market or something like that?
Well, I think it all goes back to a little bit of both. You still have the trade war talks. We had a positive tone over the weekend. If as far as the soybeans go, as well as the corn, if China just becomes a massive importer, then that's going to change everything regardless of weather or chart patterns or anything. So we're keeping an eye on that headline risk as well.
Okay, sounds good. We'll keep an eye on this livestock trade. I want to get your thoughts there next. We're going to do that straight ahead. Stay with us here on the Market Day Report. Scott, what are you hearing on the floor as far as this hog trade here today? We're seeing more weakness. Saw a lot of weakness latter part of last week after spiking to some of those new highs. And now there's talk of maybe this border issue with Mexico. How does that play into this, if at all?
Yeah, there's a lot of factors going into just this rampant, straight-up move in the hog market. To give you an understanding of how big this really is, I was reading an article that over the weekend that was pretty much written by some guy who just normally just follows equities. So with the huge move in the hog market recently, he started writing about the hogs. So, I mean, the big move in the hogs right now with all the rumors swirling around is drawing a lot more attention. We should expect to see some of that futures volume pick up in the near term. But as far as, what are the risks right now? Now, with the border crossing, and there's fear that they're not going to allow the U.S. pork to get through to Mexico. I don't think that's too much of a big deal. But right now, that's the fear gauge. That's one of the rumors swirling around. So we're going to see how that is playing out. The other bigger factor is I was also reading over the weekend that the African swine fever has affected about 30% of China's herd. Now, if we remember going back, if we had that 10% mark. So with this going up to, maybe 30s, maybe a little bit higher, the import numbers that we were looking for are anything above 50 is considered high. Now, if we're going to start to expect 200 to 300 million, I mean, that's significant, and we could see a big ramp up in price, and the option flow is definitely looking at that. You're seeing strikes all the way up from 110 to 120, all the way up to 130. So we're going to see how this saga is going to play out in the near term.
Those are pretty large numbers. You make a good point, too. In the news, it was discovered that they had 2 more confirmed cases of African swine fever in China over the weekend in their 4th largest province. Does the trade still believe that this is a much bigger deal than what was originally thought?
If you follow just purely the option flow, and it doesn't really matter which month you look at, I mean, you're seeing builds all the way up to those extravagant, extreme numbers. So the option flow says yes, but, you know, we have to wait and see how this is really going to play out.
All right, Scott, always good to visit with you. Thank you very much. Scott Gecas there at the edge of the trading floor.